Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, as Rob is referenced from time to time, the song remains the same. We're waiting on the Fed and August 1st. I know there's some internal conflicts with the Fed right now, and interested to hear Rob's thoughts on that. And of course, very excited to interact with you all. So let's get right into it. Rob, you out there?
Hey, I'm Zach. Hey, everyone. Welcome to TradeFinder Live. Happy Tuesday afternoon to you. As you mentioned, Zach, it is kind of the song remains the same scenario, at least for this week, in the fact that we are continuing just basically to consolidate at the top of this ascending pennant pattern. It's a week where we don't have a whole lot of news to drive things. We are waiting on the Fed meeting for any potential surprise cut. I think it would be a big surprise. I don't expect there to be one, but the Fed meeting is until next week. And then we have that August 1st deadline, even though um, they announced from the administration that they are moving the China deadline, which was August 12th, out a little bit further because there's further talks scheduled. So seems like things are progressing between the U.S. and China, but we'll wait and see. Other than that, not a whole lot of news unless something really unexpected happens to drive the market. So looking at the chart, you can see how we have basically consolidated since that last C wave extension at 161.8. And I've been showing people this. I don't normally put the 261.8% extension on there, but since we've passed this and are slowly trending higher, melting up, if you will, I think it's pertinent to at least show that. The data scientist at Hub, which, by the way, if you haven't gotten a copy of this software, not sure what you're waiting on, go to hub.com. You can get a copy of it for free, get the LA Wave for free. There is an opportunity to subscribe to these AI signals if you'd like, but you don't have to subscribe to get the software for free. And the AI is giving a 62% chance, so a little better than a toss of a coin, that we do go up to 650 on the S&P. But for now, we're just kind of going sideways. You can see that we're down a little bit today. We closed on the low yesterday, which kind of gave you a little bit of a heads up that today would likely be a down day. That's another little tip to watch when the market closes at the low of the day, as you can see happen here. You get a lower next day, then we rebounded, closed pretty much flat, and then opened up higher yesterday, closed on the low, and now we're down a little bit today. But we are still at the bottom trend line of this ascending pennant, and more importantly, above the 10-day moving average. So we'll see where things close today. We're off the lows. There was a sell program that came in right at 940, right after the market opened, and we had a almost a vacuum move down across the board. Everything tech, the E-mini futures, everything went down. That's what tells you that it's a sell program, that all of the holdings were sold. So there was some profit taking today. We'll see if that was a smart move or if we turn and go back to the upside. We will start a wave four at some point in time. The 10 and 50-day moving averages aren't that far apart. They're kind of moving in concert with each other. When you start to see that 50-day or the 10-day moving average get a little vertical from the 50-day, that's when you can get a bit of a corrective move back down, just as we saw here in May. So you can see how that 10-day moving average went a little vertical where the 50-day was not. That's a little bit of divergence. So that gave us that little bit of a corrective move. But when you look over here, you can see they're both moving kind of in that 45-degree angle. We're not getting the more vertical nature on the 10-day moving average, which means that we could continue to slowly melt up. So we're kind of getting in the same vein from volatility that we normally do in the summer, which is the summer doldrums. Although, as I've pointed pointed out numerous times. I talked about this in the U.S. market update last weekend. And just as a reminder, due to travel this weekend, there will not be a U.S. market update this coming weekend. So make sure you go back and watch last weekend's, where I did talk about how the VIX has this descending triangle pattern here. In other words, this trend line of lower highs. So we need to pay attention to that. And at the lower end of the line is kind of in this 15 area, or at 16 now. But if we go back to last summer, we hovered down around 12 and a half. If we get a breakout to the upside out of that ascending pennant pattern, then you would think the VIX probably breaks below 15 and heads down towards 12 and a half. Everyone seems a little bit unsure about August coming up because historically August is a crapshoot. The two historically, and it doesn't work every year. Nothing works 100% of the time, but historically, on average, September and May are the two worst performing months. The reason for that is normally in the summer doldrums, the market does melt up because there's lower volume and lower volatility, and you melt up, everybody comes back, all the kids are back in school, everything along those lines, and September tends to yield corrections. On the opposite side, in April with tax day, a lot of people are doing last minute fundings of their IRAs, 401ks, et cetera. A lot of money moves into the markets historically in April, and then you get a May correction. So historically, May and September have been the two worst performing months, but August is a crapshoot. Do people try to get in front of that move back down in September? Maybe a little bit of the September negativity has crept into August as a lot of schools start earlier in the year now than they used to. So all those things to pay attention to as far as whether or not we break to the upside out of this descending triangle or to the downside down towards 12 and a half. And as a quick reminder, I've been doing triangles for a long time. Pardon me, kind of how I made my claim to fame in the world of options is creating a very unique way of doing strangles with the best delta gamma acceleration on a strangle when you have a triangle. And I can tell you that even though you can go on the internet and read differently, any triangle can break any direction. So descending, symmetrical, or ascending, there's no lean one way or the other. It's not that easy to pick a direction. Just because it's a descending triangle does not necessarily mean we're going to break lower. It could break either way. All right, so let's move over to the bond market. We take a look at TLT, which did have a tick down in rates yesterday. Didn't seem to help the market because we did close on the lows. And today we're just kind of having a status quo day here where perhaps we end up moving a bit higher in yields or rates or lower. So we'll watch that. But this break to the upside out of this small triangle, and while I'm talking about triangles, which we feature in our volatility portfolio at evotrader.com, you don't have to pick a direction. And Elliott said in his writings, even though we look mainly at the larger triangles for larger breakouts, not to dismiss the smaller triangles. They work as well, just as it did here on TLT. It's just that when you have the smaller triangles, there's not enough of a move in order to put on a strangle or a straddle, anything along those lines. It's just kind of interesting from a technical standpoint, and you watch the breakout. If this C wave is indeed done, which it looks like it is, because as soon as it touched the 100% extension on this downward zigzag pattern, the instant we touched it, we moved back to the upside. You can see where the close was on that day that we touched the 10-day move, or the 100% extension. Right there was the close. And so we had this touch here of the line, reverse back to the upside. And again, if the zigzag is complete, what normally happens is you retrace the C wave. So perhaps TLT is headed back up towards 87, which would be constructive for the equities markets and tech, although it hasn't been so much today, but we'll see what the IWM shows in just a moment. I will show you the TNX because I know a lot of people like that as well. And you can see that we had this tick down in rates here. So that should be yielding a bit of a rally in the markets, and yet it's not. So is the market tired? Are we done with this? Or are we just having a little bit of a pause intraday right now based on that big sell program that came in, and then we turn and go back to the upside? So if we move on to the dollar kind of hanging in there in the area that I would like for it to show up, which is in this um, channel area here between, call it 95 and 100. That's the better trend line. You could move this line down here because that was the wave 5 low, but we can also just take that one off. We know that the wave 5 occurred down here. It was labeled by the algorithm, and then we'll see if we're going to move down. I would not like to see the dollar come down that far. I think that would yield questions on whether or not we're losing the dollar as the currency of last resort. We did get the Genius Act and some other legislation regarding stable coins designed to help support the dollar in the crypto world. So we'll look at cryptos in a moment. But for now, the dollar stays constructive. Keeping it down here, and as I've mentioned, I talked about this in the U.S. market update as well. The reason that we like the dollar a little bit lower but not collapsing is for earnings, exchange rate from companies that have international exposure, which a lot of companies do. As you know, we have global trade these days, and Netflix came out, they beat earnings, but they even cited one of the main reasons that they beat earnings was because of the exchange rate. And they might have had an inline report or possibly a small miss if it wasn't for the exchange rate. So that just gives you an example of how that's helpful in the world of trading. If we go take a look at I'll go to the rest of the markets first, and then we'll move into energy and cryptos. But the DIA, following that big run, I've talked about this in ad nauseum. We had this vertical move. I'm not a Dow trader. I didn't participate in this move just because I find the Dow very boring. But did get this right on looking at the fact that the Dow had lagged. I think that's where you want to look in the markets in general, is what has been outperforming and what has been lagging. We do have a lot of retail money on the sidelines in money market accounts, which is being put to work. But the retail trader tends to go with headline names, the big names that everybody's familiar with, where institutional money tends to rotate into, all right, what sector is doing well and which securities in that sector are underperforming. And the money rotates there. And that's what happened with this rally in the Dow. But in the Dow, all we did was run up to the February highs, bump our head against that level as resistance, and we've backed off a bit. We're still holding the 10-day moving average on the Dow as well, but we have not broken the new highs on the Dow as we have on the S&P and the Qs. And speaking of the Qs, having a little bit of a pullback today, touching that 10-day moving average at the low so far. Again, time between now and when the market closes to see where things end. But I do like this nice 45-degree angle move on the Qs. And once again, the 10-day is not separating too far from the 50-day. They're just moving in concert together. That's normally positive for the markets. And maybe this is just a little bit of pause in buying today. Take a look at the CCI, which is the shorter term indicator. One thing that's a little bit on the negative side is we have a little bit of divergence here where we have these lower high peaks on the CCI. We still are at positive 100, so it's not showing us anything too significantly negative. But when you have that downward move on the highs, while you're still trending up, technically, that gives you a little bit of concern on whether or not the correction may uh, go a little bit further. But since we're at that positive 100 level, that could turn and go right back up. So this could just be an in-between pause on the Qs, or maybe there's money rotating. You take a look at volume, and so far it's just been buyers are taking a day off. It's not so much that we're having heavy selling in the queues, it's just we're not getting a lot of buying, at least for now. We'll see what happens in the last hour when the institutions trade and see if they're going to start dumping some of their big tech holdings. And then the IWM, which I said we'll see how it's doing with lower rates, which is a little surprising. The IWM is the market that is the most sensitive to rates going down. We broke above this 220 level. I felt like we would run to 230. I still feel that way as long as we can hold this 220 level, but we're tedious there now, and the IWM is trying to break below the 10-day moving average if it were to close here. But again, we'll see what happens where things close at the end of the day. But for now, just kind of consolidating that initial wave 5 run, and we'll wait and see if we bounce here and move into the tap box time and price projection on the wave 5, because we didn't quite make it on the high earlier in July. But we'll see how things play out. I think it's healthy for the markets that you're starting to get people concerned about August being on the horizon and the uncertainty around August. But I don't think it's that so much as it is the Fed meeting and the August 1st tariff deadline. The market isn't reacting to the tariffs the way it once was. It's kind of priced all that in, et cetera. But a little bit of a surprise, or if some significant tariffs do go into place on August 1st, maybe that gives us a little bit of a move to the downside. I don't think it'll be anything like what happened in April. That caught the market off guard when we had those big tariffs announced. And then we've just rallied since then as the market has digested that and basically shaken it off. Let's go into the crypto space, BITB, which is for Bitcoin, trying to move higher today, but is still within this small triangle, just like I showed you on TLT. Small triangle here as well. So we're going to get some sort of a breakout move in Bitcoin. We don't know if it's going to be to the upside or the downside. This does not count as a breakout, even though we're a bit higher today. We'll have to wait and see where it goes on the calendar rollover. I know Bitcoin trades 24/7, but there is a calendar rollover for end of day programs such as this, even though it does update a couple times intraday throughout the day. But that doesn't count as a breakout move just yet. We are above the 10-day moving average. You can see we're within the tap box. In fact, the high where that wave 5 was labeled, right smack in the middle of it. It doesn't mean we can't go higher, but if we break out, which I do think we will break out of this triangle, so I should say when we break out, it's a small triangle. That would move us up higher in the tap box, not outside it, at least not yet, or back down to test that resistance line, which was the previous 3, if it was a downside breakout, which means no panic yet. If you're a Bitcoin fan, wait and see if it is a downside breakout. Does it hold that wave 3 high line? If not, then we'd probably be looking at the upward breakout. And again, this is BITB ETF for Bitcoin. There's another one a lot of people like, IBIT. They both have liquidity. They both have liquid options. IBIT does offer you weekly options, but other than that, they move in a very similar fashion. Ethereum, which really played catch up, had that extreme vertical move. So this went along the lines of the Dow, silver, etc., on playing catch up. And this is kind of what I'm talking about rotation. even in the crypto land, with Ethereum underperforming. Look at that vertical move as it played catch up, got well above its 10-day moving average. So moving back down here, and we'll see where the corrective move ends here. I thought we would get to 25. I didn't realize, pardon me. I know that's annoying. We didn't, I didn't think we would go vertically right through it. But this is why I don't like when you break a resistance level on a vertical move and separation from the 10-day moving average. It tends to retrace, not to hold. So I wouldn't be surprised to see Ethereum come at least back down and test 25 and allow the 10-day moving average some time to catch up, because we're still a bit overbought on Ethereum. The crypto traders are looking at some of the other coins which have been moving, but just like the Dow went vertical and played catch up, Ethereum did that as well. Looking at the energy sector, UNG not playing catch up. In fact, going the opposite direction as we are moving lower here on natural gas, and seem to be destined now, because if we close here, we are getting a follow through day on the break below 15. Next in line would be testing that wave 5 low, and then perhaps a move even all the way down to 12 and a half. I was opining on, as we're nearing the end of the summer, markets look ahead, natural gas, etc., looks towards winters. We've had a pretty hot summer in a lot of places around the country. I haven't looked at the Farmer's Almanac, so I don't know what the forecast is for this winter. If it is forecasted to be possibly a colder than normal winter, that could give a little bit of a bid under natural gas. But if it's not, then I do think 12 and a half comes into play. If it was, I think at some point we would be looking a little bit ahead on natural gas, and perhaps we could have broken out of this descending triangle. But for now, it looks like we're confirming a break below 15 today. And then we'll just have to see if the wave 5 low holds or if 12 and a half is in the cards there. USO just pegging itself right around 75. It's kind of that sweet spot is what I've been talking about for OPEC. In other words, oil prices are elevated but not extreme. So they're not high enough to be driving people towards electric vehicles. And that's something that OPEC is trying to be very cautious of. They want elevated oil prices. They want to make as much money as they can with the amount of oil they have left in the ground. They know that it's starting to run out, but they don't want oil prices to be so high that people say, forget this, when they go to the gas pump and they start looking for electric vehicles, because a big drop in demand would then move oil significantly lower. We're still in that big range between 60 and 80, in the upper end of the range, obviously, and around 75, which, if you go back historically on oil, has been a spot of congestion. And when I say congestion rather than support or resistance, that means we trade through that level a lot rather than holding it and bouncing off a level like we did down here around 60. That's a support level. But when you trade up, down, and that's congestion, is the way I phrase that. So 75 is a level that oil has liked to trade through, and that's exactly where we sit right now. Looking at the metals, taking a look at GLD in the gold space, we are breaking higher, and if we hold this move today, that would be a confirmation of an upside breakout on GLD. And even though, as much as I tried to craft a strangle on GLD, the issue was, in order to get the cost in the amount of risk that we publish on evotrader.com and trying to keep the deltas in line, it wouldn't work. We had to go too far out of the money on both the call and put. The spreads were too wide, or the spread on the strangle was too wide to do a strangle. So when that occurs, you just wait for the breakout and trade the directional move. And we'll just have to watch and see if gold holds this into the close. And if so, that's a confirmed upward breakout, and GLD is likely to go higher. Doesn't mean it can't come back and test the point of the breakout or test the upper trend line first, but GLD and gold seem destined to be higher than where they are right now. Looking at silver, SLV did play its catch-up move, just like the Dow, just like SLV, or excuse me, just like Ethereum. There was the big vertical move, consolidated, interestingly enough, right at the level that the AI had pegged, and the 71% chance we were going to go there, and it called it back here when we were at just over 30, and then we just kind of went dead sideways right there for almost a month, right exactly at the AI level. So consolidation there at that level that the AI identified. Then we broke higher again. We're resting just a bit today, but not too significantly so. We'll see where that ends up. Again, it's the close that matters on any chart because you need to take that last hour into play, which again is when the big money institutions trade. Retail traders tend to trade in the first hour. Institutions tend to trade in the last hour. So those are two parts of the market that you want to pay attention to. All right, so let's go a little bit around the world here. We'll take a look at Australia, down under with the EWA. Been waiting for this break to occur from 26 up to 27. We got really close in June. We didn't quite get there. I still think we're going to hit 27 on the EWA. We'll see. This is a very weak breakout of the triangle. Sometimes you break out and come back and test the point of the breakout, but on the breakout day, we didn't get a confirmation day. So unlike what GLD was showing us, where we did have a confirmation day on the breakout, we don't have that on the EWA. So we have to at least be on alert that that could be a false breakout. And then we'll wait and see if it moves higher or lower. Still could go either direction out of this triangle on the EWA. Looking at the market in Canada, friends up north for the EWC, just continuing to drift higher. The one market that has really gotten me shaking my head, just except for a brief dip down during the tariff tantrum, as I called it. We've just been in a nice 45-degree angle higher, and you like those 45-degree angle moves. When you see that and the market moves in a 45-degree angle directionally, the corrective moves, and the market always moves in impulses and corrections. That's the crux of Elliott wave. That's why Elliott wave works. That's how markets move. But when you're in a 45-degree angle, the corrective moves tend to be less severe. And that's purely evidenced there by the EWC. The negative here, and I talk about this a lot in the philosophy of Elliott wave, is if you go out on the internet and again read about Elliott wave, you'll see everyone tell you stay away from the wave three, but yet pretty much everybody agrees wave three is the strongest of all waves within Elliott wave. But the reason I say stay away from it is you don't know when the wave four is going to start. And my comments have always been, you can if there's a zigzag in the wave three. The zigzag does give you a Fibonacci target on where things could end. But if you don't have one, I do agree. It's difficult to know where the wave three is going to end. And there isn't a zigzag here. You can see there hasn't been enough of a corrective move from the April lows, not one, that creates a zigzag. So we're in a mono wave three, and that is challenging to figure out where that could end. So if we take a look at Germany, seems like that market needs to come back down and rest a bit. We got near the top of the tap box there on the wave 5. Pretty good extension there of 127%. That could give us a corrective move back down a bit. When you extend more than 100%, remember you are not looking for a correction back to the previous 4. It doesn't do that. If the wave 5 extends more than 100%, then you look for a potential corrective move back down towards the 61.8% level. And that would still be a pretty decent correction in the EWG. And I'm surprised. I was surprised that the wave 5 pattern played out to an extended wave 5 in the first place. And because if you look at the economic data that comes out of Germany, the economics do not support this big run, but the ECB cut interest rates 200 basis points, and equity markets love it when the central banks are cutting rates and creating more liquidity. So that moved into the market. Now that that's stopped, so has the upward move on the EWG, just kind of pegging ourselves right there around 42. And we'll have to see, is there one more leg higher, or are we going to start some sort of a corrective phase in the EWG? We want to take a look at the Nifty over in India. So the INDA, we've had pretty significant move in the INDA. It had its lows in March, made a higher low in April, which was first sign that maybe something might be happening in the market in India. And then we just followed this really nice old-fashioned trend channel where you draw a line connecting the higher highs and higher lows. And we moved up to the wave 5 target there. And then we've broken down. Now, a couple negative things here on the Nifty is we have broken the bottom trend line. So we've broken out of that pattern of higher lows. And yet we're holding the 50-day moving average. So we broke that. We're below the 10-day moving average. Those are the two negatives. The positive is that we are holding the 50-day moving average. And I suppose one can make an argument that if we can hold here, you could maybe draw a line like that. But you can see that this is the more appropriate line to draw the lower part of the trend line. If we break below the 50-day moving average, we're most likely coming to that where that arrow is there at the wave 4 around 57.5. But it's got to break the 50-day moving average to do that, obviously. And we'll see how that plays out. FXI has been breaking to the upside out of its own symmetrical triangle. You can see a nice move higher on the FXI. Pretty clear breakout to the upside here. Wondering if we would have a little bit of resistance here at those March highs. And we'll find out because that's right where we are. The size of the triangle is pretty large. It would suggest that we're going to break that resistance level from March and continue to move higher. But at the moment, we're a little extended from the 10-day moving average, and perhaps we need a little bit of a pause here before maybe we do continue higher in the FXI. But pretty nice breakout there. So with that, Zach, I think I've covered everything that we normally talk about. So I'll open it up a couple minutes early here for Q&A. Guess I didn't ramble on as much as I normally do.
No worries. Sounds like a plan. Let's get right into it. Got a question here from Trade Simple on HSY.
Oh, that's a very smart question because you're starting to see a little bit of, you can see the kick out there where we've just been kind of going sideways here, this breakout. There is some money rotation, which makes me wonder if we might, I'm going to go back to the chart of the Dow real quick, and then I'll come back here to Hershey. But the Dow is viewed as a little more defensive than the S&P or the Qs or the IWM, which tend to be a little bit more where risk taking is. And the big 30, the top 30 is the Dow. So it tends to be a little bit more defensive. And a lot of these food type company stocks have been underperforming the market due to the fact that all the money's been going to the higher risk stuff, the higher beta things, the big tech names, etc. But with some of that selling that's occurring uh, in other areas today, you can see there is some rotation here into stocks that have underperformed, and that looks like a pretty significant breakout to me. You're getting a nice move. I look at the CCI. If you're not familiar, if you're a new viewer to TradeFinder, first of all, welcome. But the CCI is very responsive to day-to-day movements. I also like the DMI a lot. The two directional indicators, which are the green and red lines, green representing buyers, red representing sellers, are very responsive to day-to-day movements as well. But the ADX lags a little bit, and the ADX measures the strength of the move, not the direction, but the strength of the move. And we are ticking up here, and we're above 20. So you're getting some support from both the DMI and the CCI. So my point here is that I don't think this move in HSY is finished, but maybe it needs to consolidate just a bit as we near those March highs and we have a little separation from the 10-day moving average. But yeah, I think you're on a good one that could go higher. I just don't know if it goes higher in the next couple of days.
Thanks, Rob. Next up, we'll go to a question from Bruce, and I believe that is on LQ. If not, it's IQ.
Okay. Well, we'll try looking at both. Yeah, it must be IQ because there isn't actually, there's derivatives of LQ. So let's try IQ. IQ, I tried to say. Yeah, I would imagine that this is it. It's one of those lower dollar stocks that some of the meme crowd likes to play in that space. And we had a breakout above $2. We're testing that now. So you got to keep an eye on $2. This one's a pretty easy read. We do have a bit of an ascending triangle. It's a shallow one. In other words, it's quite long from the higher lows. And we're trying to break to the upside out of it. It's about a 50-cent move. So from the point of the triangle, which is right around here, if we can continue this upward breakout, and it's got to get back above $2, you could easily see 250 here on the width of the mouth of the triangle. That's how you measure how far it's going to break out. And then on top of that, you can see all this clean air here. It was a pretty quick move down from 250 to $2 back in March. But we hit that level in February, tested it in March, couldn't break it. So we came down, recalculated, starting over. We are holding the 10-day moving average, which is a positive, but this does not count as a breakout that occurred on Friday because we didn't have a follow-through day. We came right back down. Remember the importance of a follow-through or confirmation day. We didn't have that, right back down. We are again holding the 10-day moving average, but if you're wanting to get in this, I think you wait until we confirm that move above $2, and then you got to run to 250. If you're in it, I wouldn't get out right now, but I would watch very closely if it holds this 10-day moving average, and then if it breaks below that, you've got a little more support at the 50-day moving average and this lower trend line, which is the higher lows. So a break of the 10-day moving average doesn't mean that's the end of things. You've got one more area here, which would be probably around 180. But if it broke that, then we're going to have a downside breakout, which means a 50-cent move the other way, which would bring you down to $1.50. So you got to keep a close eye on this one right now and see if we can get that confirmation back above $2.
Alrighty, let's head over to Neo for Lisa.
I think we looked at that one last week, which was interesting to see. My commentary has been since We are playing nice with China. Pretty much anything China seems to be doing pretty well. NEO, it got a little vertical. It had one sideways day here, and then big move today on NEO. The problems here, if I was in this, I would be quite cautious at this moment because we are testing those March highs, which as you saw on the FXI, were the highs in pretty much most things China. And then we are separated quite a bit from the 10-day moving average. So if I was trading call options, there would have been a huge IV infusion in the calls today because of that move. And I would be personally not giving anyone any individual investment advice, not telling anyone what to do, just saying that for me personally, on a move like that, I would take that gain out of the calls, take that IV, and then wait and see what happens, which is likely to go sideways here, maybe even a little backing and filling. We might even back off a little bit here, which I think would be quite warranted. You've heard me say this before. You don't want to break a major point of resistance, whether it's a trend line, previous high, when you're already overbought because they don't hold. So we're already extended to the upside. We've gone vertical. We're too separated from the 10-day moving average. If it did break above this level here around 510 or so, it's probably not going to hold and going to come back down. So nice call on that if you're the same one that asked about it last week. But yeah, I'd be looking to at least take some short-term gains on it and then wait and see, because if it can break above 5, it might have a whole nother run in it. But this one is getting rather extended.
Yeah.
Thanks, Rob. Just as a disclaimer, there's some really severe weather pouring through Florida where I'm at right now at the moment. It sounded like lightning just struck in my backyard. So if I happen to drop off or anything like that, that's why. But let's get right into the next question
You did
from
have a little
Lori.
short, quick blip, but um, nothing too significant. But there was a little blip, so that must have been the actual lightning strike.
Yeah, it literally sounded like it's in my backyard. So apologies to everyone out there for that. But Mother Nature strikes again. MU for Lori.
I see what you did there. Mother Nature strikes again, lightning strike. Sorry, I got sidetracked on your little pun there. I don't remember what stock you asked about.
No worries. That's MU for Lori.
Oh, Micron, which was one that I liked in the past. Did trade this one because it was playing catch up, I thought, had lagged all the rest of them, and now it's going the other way. It's completely rolled back over. So it played its catch up move, went a little bit vertical here, and now we're back testing that level in the 110 range on Micron, threatening to break below the 50-day moving average. It makes you wonder if the appetite in big tech is over for now and that there is some rotation. It wouldn't be surprising because I'm sure if you've paid attention at all to financial networks, et cetera, that the tech stocks are really overbought. When they're in a momentum run, they can get overbought and stay overbought for a while, but eventually it comes back down more towards reality. And perhaps that's what's going on in technology across the board. Note that that was a far more vertical move than what occurred in NVIDIA, which is very similar to the movement of the Qs, more in a 45-degree angle. And so you get a little bit too steep from that 45-degree angle, and this is what happens. That's why I don't like these more vertical moves. But we are in a level that needs to hold. It's the resistance level that occurred back in January, February, vague test there in March, not a significant one, but we broke it in June, and now we're testing it. So we're testing both that 110 level and the 50-day moving average. That needs to hold. If Micron's going to turn and go back up, This is a very logical place for it to hold and then bounce higher. If it does break below 110 and we continue to get follow through here, so if we get a follow through day tomorrow, there's a good likelihood we're heading back down towards 90 here, because that would be the next level of support there on Micron. So pay very close attention to where we are right now on Micron. Very similar to Neo as far as watching a particular level.
Very well. Manuel would like to know if coin topped out.
Well, it had a heck of a run. So it's going to move in general with cryptos. So we're just creating another step. It looks like I've drawn this stair step pattern. You can clearly see where it got its name. You go a bit horizontal and then vertical, and then horizontal and then vertical, and then you keep consolidating that, and it creates just the same setup that you would have in building stairs. So that is very likely what's going on now. So I would expect some more consolidation out of Coinbase right now. But it did, at least for now, hold its 10-day moving average on the low. And if we do get another run out of the crypto space, we had President Trump's proclamation of last week being crypto week with the passage of the Genius Act, et cetera, and all that legislation. We kind of moved in front of that, expecting that to get done, and it did. So now it's like, okay, now what? So perhaps a little more sideways movement out of Coinbase. Is it done for good? Let's take a look at what the indicators tell us. The ADX is ticking down, which is not what you want, but it needs to break 40. That's the key. So if the ADX comes down and breaks below 40, it does tell you that the run is over. But it can tick down and then turn around and tick back up. A couple other yellow flags, caution signs, is the positive directional indicators moving down, the negative is moving up. That's kind of coinciding with the ADX ticking down. So we're just going to have to watch and see if we can hold this 10-day moving average. The best scenario for Coinbase right now would be some sort of sideways consolidation through here. We're also right at a big round number of 400, and those tend to act. Some program trading is programmed to sell when these big round numbers are hit. Because technical traders know that, and I've always used the analogy of the tractor beam effect. I give my dad a nod on that every time. As a big original Star Trek fan, the original show, and you would hear him talk about the tractor beams when they would approach a planet or whatever, drawing the Enterprise to them. That's what the big round numbers do. Stocks just tend to migrate right to those levels, like they're drawn to them, and then people take some profits. If it's not done, then we're just going to consolidate here. If we break down below the 10-day moving average and then start to head towards this lower step here, then that would mean that that wave 3 is likely finished and we're starting the 4. But we can't say that yet. It seems like the majority of the stocks we're looking at tomorrow is very important to see if there's follow through, if there's a reversal. Where are we tomorrow? So obviously you have to close the day today first and see where things close today. It is holding its 10-day moving average, at least for now. And you would want to see that continue. You wouldn't want to see it break below there. So not sure that Coinbase's run is over, but it's definitely taking a break here at 400.
Thanks, Rob. Got a couple of symbols from Will for you. First one's going to be Tesla.
We talked about that triangle there, and that one was way too expensive. And we got a bit of an upward breakout, came back down, tested the 10-day moving average on the low today. We're back higher, at least at this point of yesterday's close. So it seems that Tesla is breaking to the upside. And what you like about this is it isn't a vertical breakout. It's trying to break in more of that 45-degree angle. And if it can do that, I would think we could call this an upside breakout and expect that move to continue. It will have resistance at 350, however, so I don't think it's just going to be a straight move. But at this point, certainly seems destined to test 350, and then we'll reevaluate at that point in time.
Thanks for the recap there, Rob. And Hood.
Boy,
HO.
Robinhood had a heck of a run as well, and also kind of taking a little bit of a pause, just went sideways underneath that 100 level. So that was another one of those big round numbers, the tractor beam there. Once you got to 85, there is some research out there that shows when a stock gets to 85, there's a very high percentage chance that it will continue on to 100, which is what happened here in Robinhood. We made it up to 85, consolidated, and then just boom, blasted right to 100. Consolidated a bit here, had an upward breakout. We did have a very small ascending triangle right there. And so the breakout move that occurred was pretty much in line with what you would expect from the small triangle. That was a pretty vertical breakout, had a doji. Now we're back down testing 100. So the key is, can Robinhood hold 100? If it can hold 100, it might have further room to run. It just was a little vertical. And you can see each time, little vertical, sideways, little vertical, bit of a retraction. So can it hold here and continue higher? We're getting the same scenario here out of the two directional indicators where the negative's moving down, or excuse me, the negative is moving up and the positive is moving down. That ADX got really high. You don't see too many of them make it all the way up to 60. That seems to be kind of the ceiling. And I've always said that I've ever asked Wells Wilder, why did you create the scaling on the DMI from 0 to 100 when you almost never see the ADX get above 60? So I would have been curious. Very smart mathematician was Wells Wilder. Also created RSI. Same guy created both of those. I just prefer the DMI over RSI. But I would be very curious into what the reasoning was. I'm sure he had a good one. But back to Robinhood, 100 is going to be key here. Can it hold this level? It's trying to today, but it needs to hold 100. If it gives it up, it could easily go back down towards 95 or even 85 rather quickly. So whether or not it can hold 100 will be the key there on Robinhood.
Thanks, Rob. Next up, we're going to go over to a question from Parkrist on RIG, RIG.
I haven't looked at that one in a while. Man, remember the days when this was one of the hottest stocks out there. You can go back in time and see how high that thing traded at one point in time. Not in that world anymore. Just been kind of going back and forth here between $2 and $3.50. So it's had a bit of a wide trading range here between 2 and 350. Maybe just a little under, maybe more like 340 there. We're trying to hold this wave 4 in the area of the 61.8% fib level. We've tested it. It held it with a slightly higher low. We know that because if it was a lower low, that wave 4 would have moved over to that bar. And that bar occurred on the 17th of June or July, excuse me. And so far it's held and back above the 50-day moving average. So what I would watch for on RIG is, can we break $3? I think it would be tough to jump in right now unless you're very aggressive. And if you are aggressive by nature, you know that you can win big when you're right, but you can also lose rather quickly when you're wrong. If you're more conservative minded, and everybody knows what their own personal risk tolerance is, we all want to be kind of viewed as being willing to take some risks, or we wouldn't be trading in the first place. But then I try to divide it from there on being very aggressive or more conservative. So if you're super aggressive, you could try to enter now. if you were looking for something a little more conservative, see if it breaks $3, then you're pretty clear up to 340, maybe 350, and then we have the same scenario again with likely resistance at that point, and then see if it can break above the 340 level. If it could do that, then $4 seems in the cards. So there's some steps ahead that rig could make if it can hold back above this 50-day moving average like it's trying to today, and then manage to break three. So those are the two things to keep an eye on there with rig.
Thanks, Rob. Next up, let's go to JOBY, Joby Aviation for Jeff.
Take a look, and been a little bit in the news, and you probably know what I'm going to say already. Too vertical here for me. Let's take a look at the volume. Big volume days. So obviously, once it got above 10, if you've been listening, the significance of the $5 and $10 level in stocks. Stock to trade below $10 and above five, or for an institution, if you will, mutual funds, investment companies, etc. Their investment objective has to be registered as aggressive growth to trade at five. When it moves above 10, then that allows any institutions that have growth as their investment objective. So it could be just growth in income, etc. They can own stocks above $10 a share. So it opens it up to a whole lot more institutional size volume when you break above 10. And you can see clearly that that was supported by these big volume bars here, huge volume in it, and it just got too vertical, too fast, too far from the 10-day moving average. So we're doing some backing and filling today, correcting back down towards that 10-day moving average. Now, what I'd want to see is, can we hold 15? To me, that's the key on this. Just a little bit of consolidation right there, I think would be quite healthy for this stock. And if it can do that, then perhaps it can take off on another run. But right now, it's just consolidating that last vertical move. And again, the backing and filling that I talk about, backing is a little bit of a downward move. Filling is going sideways, perhaps filling some gaps, etc. When a stock has gone vertically.
Thanks, Rob. I see we are at time, and in the effort to
Wow,
save
that was
bandwidth
quick.
possible, let's have you just go over the case study consideration, and we'll do the post after on the platform as we always do. But I'm not gonna screen share, just again to save the bandwidth and for the presentation efficiency.
Okay. Yeah, that I thought, we've got extra time for Q&A today. That's great. I did want to update everyone on last week's case study, which was FAST. That's marching nicely higher. It didn't have a real high score on the AI, but as you know, I liked the zigzag that was in there, as well as the fact that we had an AI target of better than a toss of a coin that we'd go higher. There's the ADX, still looks really good. Even though the positive directional indicators come down a little bit, it's still above the ADX. And that's about as vertical as you ever see the ADX go, because as I've mentioned, it does lag a bit. So looking good so far there. So I just wanted to update you on that from last week. And this week is going to be GLD. That upside breakout, we're going to assume that it does close as a confirmation day, and I think GLD goes higher from here. So next question you're going to ask is, all right, well, where does it go? Well, let's measure the mouth of the triangle. So call that 295 and 315. So 295 up to 315 gives us about a 20-point move. So it seems that GLD wants to approach 330. Looks to be the movement there. So that's what I'm looking for as far as this week's case study. GLD breaking from its triangle and moving up to its breakout level at or close to 330. All right. So with that, Zach, thanks for all you do behind the scenes. As always, thanks to all of you that are viewing, spending your valuable time, and we're very respectful of everyone's time, including our own. Time is the most valuable asset that all of us have. We talk about assets with stocks, etc., but time is a big one. And the older I get, the faster I realize it goes. So thank you for spending some of your valuable time with us this afternoon. And we'll see how the rest of the week plays out with this kind of news void, barring anything unexpected occurring. And then watch out next week. We could see some volatility return if we don't get it by the end of this week, next week for sure. So have a great afternoon, everyone.